Good morning and welcome to this, the fifth meeting in 2020 of the Finance and Constitution Committee. The first item on our agenda relates to changes in the membership of the committee. We have two new members attending committee today and I will invite them to declare any relevant interests in turn. Firstly, I warmly welcome Donald Cameron to the committee and invite him to declare any relevant interests.
Thank you, Convener. Can I refer to my entry in the Register of Interests for anything which may be relevant to the work of this committee?
Okay, thank you very much. Can I now also ask George Adam to declare any interests they might have?
No relative interests.
At this stage, can I also thank Gordon MacDonald for his service on the committee, which I'm sure everyone appreciated. So therefore, our second item on the agenda is to choose a new deputy convener. And in doing so, before I do that, I'd like to put on record my thanks to Adam Tompkins for fulfilling that position over the past few years. His dedication to the role was always carried out in a constructive way in which he approached the committee work, and it was much appreciated, particularly by myself as the convener. So the committee's next task is to choose a new deputy convener, and at the start of the Parliament, it agreed that only members of the Scottish Conservative and Unionist Party are eligible for nomination as the deputy convener of this committee. I understand that Murdo Fraser is the party's nominee for this post, and do you agree to choose Murdo Fraser as the deputy convener? Yes. It's unanimous. I'm glad to say, Murdo.
That's a relief.
I congratulate you on your appointment. Thank you. Now, just let me see where we are. Yeah, the third item on our agenda is to take evidence on the Revenue Scotland Tax Powers Act 2014 Amendment Regulations 2020 draft. And we'll be having evidence from Ben McPherson, who's the Minister for Public Finance and Migration, and Ewan Cameron-Nielsen, who's the team leader for the Fully Devolved Taxes Policy Unit in the Scottish Government. This, I think, Mr McPherson, will be your first meeting that you've attended of the Finance Committee in your new portfolio. And I welcome you to your new portfolio and congratulate you on your appointment. And I wonder if you would like to make an opening statement.
Thank you, Convener, and congratulations to the new Vice Convener. I just want to say in the first instance how much I'm looking forward to working with the committee in my new role as Minister for Public Finance and Migration together for the common good of Scotland, and to also just for clarity state, as it does in my register of interest, that I am on the roll of Scottish solicitors, though not a member of the Law Society of Scotland. Just for clarity. Moving to the legislation in question, the Revenue Scotland and Tax Powers Act 2014, which I will refer to in the remainder of this opening statement as the Act, enables Revenue Scotland to apply penalties where a person fails to submit their tax return by the due date, known as the filing date. In, for example, a standard house purchase, the filing date is 30 days after the relevant transaction has completed. The available data suggests that the overwhelming majority of taxpayers submit their LBTT returns on time. However, where this is not the case, the Act provides for penalties to be charged at 4 separate points, all of which seek to encourage compliance and ensure that taxpayers submit their tax returns on time or failing that as quickly as possible. Firstly, an initial £100 penalty is charged if a return is not made by the filing date. Secondly, if the failure to make a return continues for a further 3 months, daily penalties then apply at a £10 per day rate for up to 90 days, a total of £900. It's to these daily penalties that the regulations relate. Thirdly and fourthly, in addition, the Act provides for tax-geared penalties where returns are more than 6 and more than 12 months late. With that as context, the regulations before the committee today amend section 161 of the Act to provide that a daily penalty can be charged by Revenue Scotland through a single penalty assessment notice. Committee members will be aware that this legislation has been brought forward in response to a decision by the Upper Tribunal for Scotland published last July, which related to a scenario whereby Revenue Scotland did not know that a return was due until it was submitted. In that case, the Upper Tribunal noted that for daily penalties to be valid, the legislation required two separate notices to be issued, a notice of liability and a notice of assessment. It concluded that a single penalty assessment notice as used by Revenue Scotland for daily penalties was not sufficient for these purposes, although the information contained in the single notice was sufficient in terms of what each notice required. Critically, however, the Tribunal noted that requiring Revenue Scotland to issue two separate notices would, and I will quote directly from the Tribunal, serve no useful function in the case of many LBTT penalties for late returns and, where it is necessary, would be potentially confusing for the taxpayer and could involve him or her making a redundant additional appeal. The Tribunal went on to note that if the difficulties were sufficiently serious, then it may be that a charge to the penalty provisions would be a change to the penalty provisions would be required. We agree with that view and have brought forward this legislation accordingly. The sole purpose of the regulations is to enable Revenue Scotland to issue a single penalty notice when a return is sufficiently late for daily penalties to apply. The regulations do not change the obligations placed on taxpayers, nor the amount of penalties which can be charged. Finally, it may be helpful to the committee to note that there are two overall scenarios where daily penalties could be charged and which are relevant here. One is where Revenue Scotland knows a tax return is due, and the other is where it does not. The first scenario applies where a taxpayer is due to submit a return associated with the 3-yearly review of the tax position for non-residential leases. In this situation, Revenue Scotland will know a return is due because of the effective date of the initial transaction contained within the original tax return. As set out in their letter to the committee, Revenue Scotland issues a series of communications to taxpayers in advance of the date that a return is required and subsequently, all of which are clear about the daily penalty provisions. Critically, those processes will continue in the future, regardless of this legislation today. The second scenario, where Revenue Scotland is not aware a return is due, as is the case with the majority of LBTT transactions. In that scenario, it is, of course, not possible for Revenue Scotland to issue a warning letter in advance of the return being made. But while this is the case, the LBTT legislation is clear on the requirements for a tax return to be submitted, and the Act is equally clear on the circumstances in which penalties will apply. As such, taxpayers and their agents should be aware of the requirements placed upon them and the consequences of failing to meet those requirements. And while the data indicates that the overwhelming majority of taxpayers submit their returns on time, and it's important to remember that. Whilst I recognise that stakeholders have expressed concerns about the use of daily penalties more generally, the changes in the SSI before us respond directly to a suggestion made by the Upper Tribunal judge and have been brought forward to avoid potential confusion to the taxpayer. So I hope that is a helpful summary, and I will be very happy to take questions from the committee convener. Thank you.
Yeah, well, thank you, Minister. Obviously, we're aware of the context, and you yourself talked about the consequences if someone didn't submit any return. And that's something that obviously the Law Society have picked up on, with their suggestion that daily penalties are not appropriate for situations where Revenue Scotland does not know that a transaction has happened until after it's submitted, and therefore such penalties, they think, may not affect behaviour in the way that the government might expect. What would your reaction be to that?
Well, grateful for the contributions from the Law Society. I think it's important to emphasise again that this order is a technical amendment which takes account of the comments of the Upper Tribunal judge and seeks to respond to them in order to bring legislative clarity to the legislation as it is and avoid potential confusion for the taxpayer in terms of the duplication of notices and then the potential for duplication of appeals. Penalty arrangements, including daily penalties, do play an important role in encouraging taxpayers to submit their tax returns on time. And as I said in the opening statement, whilst I recognise and I'm willing to consider the broader points made about the appropriateness of daily penalties, in the LBTT regime. This would be a much bigger piece of work. It would require much more significant consideration and consultation, and a much more significant change to the penalty arrangements agreed by the Parliament previously. So open to considering that going forward, but I think the significance of the legislation today is to make the primary legislation as clear as possible, and to respond to the outcome of the tribunal.
Murdo Fraser.
Thank you, Convener. Good morning, Minister. I should remind members of my register of interest. I am a member of the Law Society of Scotland. And just to follow up on the Convener's questioning, according to the evidence we've had from the Law Society in relation to the point you made about the two-stage process, they've pointed out that the provisions within the Revenue Scotland and Tax Powers Act 2014 do provide for a two-stage process, but yet these regulations are removing that requirement. So what is the policy and motivation behind that, moving away from what's in the 2014 Act?
So it brings it into consistency with other elements of the LBTT regime where that's not required. But also, as I said, it's about responding to the tribunal outcome and making sure that in order to avoid the confusion that there was in that case, but also the possibility and potential and risk of duplication of an issuing of penalty notice and then thereafter a potential for duplication of appeal. These regulations before us today are to seek to refine the clarity for both taxpayers and the process in order to make sure that it is as clear as possible in response to the proposal and the outcome of the tribunal.
The Law Society suggests in their notes that it's their view the focus of a penalty regime should be to influence taxpayer behaviour rather than raise revenue. Is this just simply a revenue-raising measure?
No, it's about how do we provide as much as an effective regime as possible in order for, in the different scenarios, as I spoke about in the opening statement, for the taxpayer to be clear on what the situation is and to make sure that there's a consistency through the way that the legislation is implemented for LBTT as a whole, and that there is an appropriate response to the outcome of the tribunal.
Thank you.
Alexander Rett.
You can be in the letter from Revenue Scotland. They refer to Adam Smith's Wealth of Nations and the principles of taxation, and how this legislation will applies to the principles of certainty and efficiency. However, one of the other principles is fairness. And in the submission from the Law Society, they talk about disproportionate penalties. So I just wonder what the Minister thinks. How fair is it to pay a fine when no tax is due?
I think the Law Society submission, which speaks both to the outcome of the tribunal but also to the wider question of the daily penalties, as I said, is something for consideration, but is a wider point around the appropriateness of daily penalties within the LBTT regime. And as I said, this would require much more significant consideration and consultation and a much more significant change to the penalty arrangements agreed by the Parliament. And if the committee has further thoughts and analysis that it wants to undertake on that point, I think that's something for consideration. But this is about how do we, this legislation before us today is about how do we make the scenario as clear and as effective as possible in response to the outcome of the upper tribunal and being responsive to that.
So just to confirm, so is the Minister saying that in future they'll be bringing forward legislation so that if penalties aren't, if there are no penalties, if there are there's no tax due, then no penalties would be due also?
And just for clarity, I'm not committing to that at this point, but I'm saying that there is a wider point that's been raised by the Law Society, which both the government and indeed the committee may want to consider in due course.
Thank you.
Of course, the reverse of this is true as well from the Law Society's argument. If there were no penalties, there would be an incentive then for people not to pay their tax.
Indeed.
So we need to keep both sides of the balance in this right. Patrick Harvey.
Thank you. Good morning, Minister. I hope if there is future consideration given to that latter point, the question of proportionality will be about, you know, is the penalty proportionate to the responsibility that the taxpayer has to submit a return? There wouldn't be any way of making it proportionate to a zero tax liability, because that would mean no penalty at all. So, you know, proportionality should be to the responsibility the taxpayer very clearly legally has to submit a return. Can I just check that I understand this issue about the daily penalties? This only kicks in sometime after there's been an initial £100 penalty. So even if the tax authority wasn't previously aware that a return was due to be submitted, by the time that's happened, by the time a daily penalty becomes liable, the taxpayer already knows they've done something wrong.
That's correct. So there's a process of, first of all, the taxpayer and the agent, particularly acting on behalf of the taxpayer with an awareness of the legislation passed by this Parliament, and the system should be clear that within 30 days an LBTT return is required. Then at that point, if that return has not been submitted and a £100 penalty is administered, then thereafter there's the 3 months. There's 3 months, and then after 3 months, it is only after effectively 4 months, there or thereabouts, that the daily penalties would kick in. So there's a substantial time frame where there are opportunities.
Grace period, knowing that after that there'll be a daily penalty due. So the daily penalty does have the effect of incentivising them to submit their return, unlike the Law Society's argument.
Ewan, do you want to comment on this?
Yeah, it might be helpful just in terms of going back to what the Minister was saying about the two different scenarios. So where Revenue Scotland is aware that a return is due, so in relation to the 3-year review process, they're then able to, and there's a series of communications that go from Revenue Scotland to the taxpayer in advance of the return being due and subsequently. And so, as you say, there'll be the £100 penalty that would be issued at the appropriate point. They'll flag at that point that the daily penalties would fall due on a certain date. So there is that process in place, so the taxpayer and their agent should be aware of the arrangements. Where Revenue Scotland isn't aware that a return is due, the legislation is very clear and the guidance is very clear on the penalties that would apply. But until Revenue Scotland is aware that the return is due, it can't actually actively issue a penalty to the taxpayer.
But the taxpayer has the responsibility to be aware of their duty to submit a return.
Yes, and in the legislation and Revenue Scotland guidance is very clear on those responsibilities.
Okay, thanks.
Patrick, anybody else got any other questions? Okay, if there are no other questions, we now move to agenda item 4, which is consideration of the motion on the order. And I invite the Minister to move S5M 20744, that the Finance and Constitution Committee recommends that the Revenue Scotland and Taxpayers Act 2014 Amendment Regulations 2020 draft be approved. Do members have any further comments? In which case, I now put the question on the motion. The question is that motion S5M 20744 be agreed. Are we all agreed? Yes. We are agreed. We now turn to consideration of the Land and Buildings Transaction Tax. Sorry, I better suspend for a couple of seconds to allow a changeover of officials. On you go. We now turn to consideration of the Land and Buildings Transaction Tax, Tax Rates and Tax Bands Scotland Amendment Order 2020 SSI 2020-24. The Minister is joined for this item by James McClellan, who's the Head of Fully Devolved Taxes Policy Unit at the Scottish Government. And again, I invite the Minister to make a short opening statement before we move to questions from the committee.
Thank you, Convener. The Land and Buildings Transaction Tax Rates and Tax Bands Scotland Amendment Order 2020 provides for the changes to the LBTT non-residential leases set out in the budget, Scottish Budget 2020-21 on the 6th of February. The order introduces a new rate of 2% for LBTT non-residential leases where the net present value, NPV, of the rent payable under the lease is above £2 million. This moves LBTT into line with the 3 tax band structure for leases in the rest of the UK, and the measure will raise an additional £10 million in 2020-21. Important additional revenue to help fund public services in Scotland. We do not expect this change to have an adverse impact on the market. The Scottish Fiscal Commission's analysis suggests that any behavioural impact from the measure is likely to be small, with fewer than 10 transactions lost as a result. 95% of transactions will be unaffected by the change, and the changes will only apply to leases entered into after the effective date. So the new rate won't apply to any further returns made in connection with the 3-year review, assignation or termination of a lease where the effective date is between the 1st of April 2015 and the 6th of February 2020. Latest reports on the commercial property market in Scotland suggest that overall the market is healthy, and the tax increases should be set in context against other financial considerations. For example, when looking at the cost of leasing in Scotland, it compares very favourably against comparable cities in England. We will, of course, continue to monitor the impact of this tax change, and the committee will be aware that this is the first time the provisional affirmative power has been used in full, with the order coming into effect almost immediately from the date after the Scottish Budget on the 7th of February. We have taken this approach in response to feedback from stakeholders on the changes made in the budget last year, 2019-20, and to mitigate the risk of forestalling. For example, in their evidence to the committee about the Scottish Budget 2019-20, the Law Society said that we therefore suggest that it would have made more sense either to make the changes effective from budget day 12th December or to make them effective from a date later than the 25th of January 2019 to allow taxpayers to take into account the impact on transactions. So we have listened to this feedback from stakeholders and are responding accordingly. And on forestalling, even with the limited period between announcement and the changes coming into effect, last budget, around 6 weeks, we still saw a forestalling impact, so it's an important consideration. Introducing the change with near immediate effect, as is the case in this instance, should address this risk. And I hope this is helpful. This is a helpful summary of what's before us, and again, I look forward to taking questions on the order.
Thank you, Minister. We'll start with Alexander Burnett.
Thank you, Convener, and I note my register of interests around property. So my question, first of all, is really on just to get an understanding of the operation of a tax. So can I be, to be clear, it will apply if the rental value is 2 million a year, or 1 million, but the lease is for 2 years, or 100,000 rent a year, but the lease is for 20 years. Is that how it's works?
It's if there's its overall value is over 2 million, so that's when the lease will apply. The rate will apply. So.
Example of the last one, if the rent is 100,000 a year, but it's a 20-year lease signed into, taking the total rent to 2 million would mean that it applies. Is that correct?
Do you want to comment on this, James?
Yeah, so I mean, there's guidance around the calculation, how the calculation of the NPV works, on the Revenue Scotland website. But effectively, you know, what you're saying there is correct. So there's kind of three stages to get to your calculation of whether you're above 2 million or not. First is the NPV calculation. So you effectively apply a discount rate there. To calculate the value today, the sort of present value of the rents that will be paid in future. You then look at the term of the lease. So, as you said before, whether it was a year or 2 years, and finally there's the amount of the rent payable. Now, if you don't know that at the time, there's an estimate that takes place. But effectively, those three factors combined gets you your NPV value.
So when you talk about transactions being lost because of behavioural response, is it not going to be fairly simple for people who would otherwise enter into long leases? We'll just reduce it from, say, 20 years to 19 years, and then avoid the tax that way?
First of all, it's a sunk cost, so it's not a recurring it's not a recurring cost that's going to be onerous on those leasing for business in a cyclical way. In terms of the avoidance point, do you want to come on to that?
Yeah, I mean, I think, you know, that's something that we'll, you know, look to monitor. I mean, I think that, you know, the SFC have obviously done a calculation of what an estimate of what they think the potential behavioural effects could be. Now, I think, you know, they've noted that that's subject to a high degree of uncertainty. But, you know, that's something that we'll look to.
And so are you able to provide more information around those 284 transactions to see what the ratio of annual rent to length of the lease is, to see how many could be avoided?
As officials have said, we will continue to monitor this going forward. The analysis from the SFC is on their website. For the committee can look at that in detail. But I think it's important to also emphasise that the SFC's analysis and forecasting also proposes that it will be a significant and important. This will raise important revenue for public service provision of approximately £10 million per annum, and I think that's important to emphasise as well.
I hope we share the confidence in the SSC's forecast for LBTT. Thank you.
John Mason.
Yeah, I was kind of on the same point, really. I mean, I'm struggling to understand a little bit because Mr. Burnett's suggestion was that, you know, people would restructure their leases, so they wouldn't actually be lost; they would just be maybe rearranged and therefore less tax paid. But I mean, if I understood you correctly, and from the papers we have, the SFC are actually suggesting that some transactions would be lost. Now that would suggest that a lease doesn't go ahead that might have gone ahead. Am I understanding that correctly, or is that your understanding?
Yeah, but the proportion is 10 to 1, so £1 million potentially lost in revenue from the leases lost. However, a 10 million gain from this change. So the cost benefit analysis is clear. I think it's again important to emphasise that this would be a sunk cost for business in an environment where Scottish commercial property is in a successful place and the market is in a buoyant place, particularly considering all the other externalities that have had an impact on the economy over the last 12 months and before. So there's analysis here based on a continued buoyancy, and that this change before us today would affect a very small amount. So, for example, a £5 million lease, you know, the additional tax payable would be £30,000, and this represents just 0.6% of the discounted rents payments. Even a lease of 10 million, again 30,000 or less than 0.3%. So it's in comparison to the sums here for these transactions, it's a small sunk cost at the process of the lease agreement, but with a significant positive benefit for revenue for public service provision.
Well, I mean, I accept all of that, and I accept if it's an extra 10 million, that's great because that can go into the police or wherever it can go. But I'm still intrigued as to what these 10 transactions, and I accept that's an estimate, could be. I mean, is that like some business that might have come to Glasgow but it's going to go to Birmingham instead? Or is it just that a lease might not be renewed? Or, I mean, can you give us any example of what the ones we're losing? I accept it's a small number, but, you know, what they might be?
So it's an analysis done by the Scottish Fiscal Commission, and I think to understand their analysis fully, I wouldn't want to speak on their behalf, but officials have had direct liaison with the Scottish Fiscal. So do you want to speak somewhat to that point?
Yeah, so I think the published analysis that they've got doesn't break down those 10 transactions by category. I think, you know, we can certainly follow up with the Fiscal Commission and come back to you. But I suspect, given the data that's available and the you know, the small number of transactions that we're talking about, you know, it wouldn't be possible for them to provide that kind of level of granularity and accuracy. But we can certainly take that away. But I suspect, you know, their analysis will show, you know, it's a kind of a broad category of lost transactions made up by a number of the scenarios that you've set out there.
Yeah, it's a forecast, and therefore they're making a forecast. They can't possibly know what type of company or when at any stage. So it's the forecast that they've made.
So would it be fair, Convener, to say that how reliable the Fiscal Commission's forecast is, we won't know until next year?
We never know. It's a forecast. Sorry, do you want to respond to that, James, instead of me responding to it?
Well, yeah. So I think so. We will we'll have outturn data at the end of the year. So you know we'll be able to compare that to the broad forecast. I think the degree to which we'll be able to tease out whether or not these 10 transactions were lost and all of that, I think will be very difficult.
Yeah, that's not just, I mean, Mr. Burnett's point is that if we start seeing behavioural change as a result of this, then actually the 10 million might never come to fruition. But we won't know that until we see how this new tax beds in. Yeah.
Indeed, it might be more. It's a forecast. Murdo.
Thank you, Convener. As an aside, Minister, I was very heartened by your characterisation of 0.3% of the total cost as being very manageable, because that is the sum total of our budget asks to the Finance Secretary in relation to the budget. So I'm sure she'll get that message loud and clear from you later today. That wasn't what I was going to ask, though. In relation to what you said earlier about the policy objective, I mean, I take it from what you say, there's not a broader policy objective here. This is simply a unadulterated revenue raiser.
Well, there is a policy objective to bring consistency to what we have in Scotland in comparison to the rest of the UK, and indeed what we're proposing today is exactly what Wales has. The 2% in the rest of the UK outside Scotland and Wales, so in England is I appreciate is over 5 million rather than over 2, where the rate goes up to 2%, but also the attractiveness of the Scottish property market is very high, and I can say more about that if you wish, in terms of comparison to say, for example, the situation with leases, for example, 25,000 square foot prime office in Glasgow pays $1 million less in rent over 10 years than comparable premises in Manchester. A 5,000 square foot Zone A retail unit in Edinburgh pays 2.25 million less in rent over 10 years than comparable premises in Birmingham. So it's a very competitive environment that we have up here, and we believe that in order to continue to sustain the public service provision, which of course business benefits from hugely, this £10 million in additional revenue will help towards that, as in the wider budget question. And of course, just to emphasise again, this is not a recurring cost, it's a sunk cost, it's a one-off payment when a lease is entered into a transactional point.
Okay, thank you for that. You've now said two things this morning that hearten me, because you've now said it's a policy objective of the Scottish Government to bring taxes into line with the rest of the United Kingdom. So that's something else we'd like to see you follow through on. But has there been any business impact assessment done, or was there any consultation done prior to these measures being brought forward?
Yes, there was. First of all, there was an engagement with key stakeholders. We have listened both in, as I spoke in the opening statement, in terms of engagement with key stakeholders in how this was done in the last budget, but also engagement with the Law Society of Scotland and the ICAS in consideration of this, and the Chartered Institute of Accounting,
So I think, I mean, I think just to add to the minister's point. So I think around the process, as the minister was saying out there, around you know, how the timing and the process for the way the legislation was brought in, that reflects feedback that we had from stakeholders. But in terms of the actual rates and bands, the change, so there was no prior consultation there, and the reason for that was because of the forestalling risks that the minister set out at the outset, and that's consistent with the approach we've taken, and I think the approach across the UK in terms of tax changes in this area.
And just for clarity, when I talked about the rest of the UK, of course, I did emphasise the point that there is a divergence, that 2% will be on over £2 million rather than over £5 million in England. Just for clarity, Mr. Fraser. Donald Cameron.
The Law Society make two rather specific points about wording. I don't know if I think you've seen the letter. Do you have any observation on that? I mean, they say that it should be singular, not plural. It should be contract, not contracts. And they make a point about possibly adding a reference to concluded prior to the 6th of February.
I haven't seen that submission personally. James, do you want to?
Yeah. So we've seen the letter from the Law Society, and I think I mean the legislation is as drafted. I don't. There's no indication that will undermine the transitional provisions that are in place. But I think welcome the submission from the Law Society, and we're very happy to reflect on that for future changes.
Thanks.
You see, we've got a lawyer who's now joined the Finance Committee as well. Another one. Indeed. Any other questions? In which case, we now move to agenda item 6, which is consideration of the motion on the order. I invite the Minister to move S5M 20926, that the Finance and Constitution Committee recommends that the Lands and Buildings Transaction Tax, Tax and Rates Tax Bans, Scotland Amendment Order 220 SSI 2020-24 be approved.
Formally moved.
Thank you. Are there any other comments from members? There are no other comments. I therefore put the question. The question is that motion S5M 20926 be agreed to or well agreed? Yes. Great. We are agreed, and therefore the committee will now publish a report to the Parliament setting out our position on both the statutory instruments in the coming days. I thank the Minister and his officials for their evidence today. And this was the last item on our agenda today, and I will close this meeting of the Finance and Constitution Committee. Thank you very much.